Hi, welcome back to the second episode of the Bootcamp. To start this episode off, I thought why not show you that I can win a trade. So currently we are in this long on GU right here at break even, playing between break even in a little bit of drawdown right now. This is a little trade that we're in. This is the second episode. I know I said I'd be teaching a beginner, but my friend said he couldn't make it tonight, so I think we're just gonna have to reschedule. But today I just wanted to talk about what you guys need in terms of the apps you use, the websites you use to take trades. So right now I'm using TradingView. It's pretty easy. You just search it up, sign in, make an account. You can change the chart colors right here. And then the app I use to take a trade is MetaTrader 5. I'm pretty sure you can find it on the App Store by yourself. And yeah, it's pretty easy to take trades while still not risking any money, especially on MetaTrader. You can easily get unlimited demo accounts, so that lets you trade real time in the market, practicing ideas, practicing confluences, practicing strategies that I'm going to teach you, and you're not going to lose any money. It's all going to be paper money, it's all going to be fake money, and that way you can get experience within the market without actually losing any money in the present moment. Those are the two apps that I'm using right now. We're going to talk about the fundamentals today. There's another app called Forex Factory, but we'll get into that later into the series. The fundamentals for trading is trend, time frames, candlesticks, and the pair you trade. So we'll go over pair first. Currently you can see we're trading GBP USD on the 1 minute time frame. There's 5 minute time frame, 15 minute time frame. These are all your internal small time frames that you use to look for scalps. And then your high time frames are the 1 hour, the 4 hour, and the daily. So I took a little scalp today on the 1 minute, on the 5 minute, and the 15 minute because I thought that we are bullish. The second thing we're talking about, trends, bullish. This is a bullish trend because we're going up. Every bullish trend needs a retracement. When you go up, you need to come back down to continue higher. That's just how it works. I took a trade guessing that this was the retracement and then we're going to continue higher. Obviously, we could still lose. The market is literally 50-50, so it's not guaranteed that I win. But I just took a little stab, a little chance, thinking we might go higher. This confluence is higher, which we'll get. I want to say so much more and talk about all these confluences and stuff, but I'm just going to have to wait until we get later into the series and we can explain more about it. But until then, let's watch this trade play out and then we'll talk more about everything else we need for a fundamental as a beginner trader. Who knows, maybe I could lose. If I lose, that's just a humbling experience. But yeah, let's see how it plays out. I don't want to get too in depth with my strategy, but something that I can teach you guys right now is called an SMT divergence. So right here we can see on Euro USD, it has to be fair. Okay, let me set it up. Set up the boundaries first. Set up the rules. For an SMT to be valid, it needs to have the same second pair. So it's Euro/USD. That the pair that you have an SMT with needs to end in USD. So you see GBP USD because these pairs move similarly. And when you see something like this, which I'm about to show you, that can be used as confluence on price action. So we can see on Euro USD, if we look at this low at 8:40 p.m. and 8:39 p.m., it creates a lower low with the low at 9 p.m. right here. Right, this is an SMT because on GBP USD, if we look at this low right here at 8:40 and the 9 p.m. low, we have a higher low. So there's a difference between our pairs called a SMT divergence. GBP USD has a higher low and Euro USD has a lower low. Now this can be confluence for price moving higher like it is right now. Hopefully it'll push to my target. But honestly, this could have been my entry. I could have taken a trade based off this. This trade is now more high probability because of this. Before I took this, it was a bit of a gamble, but because of this confluence, it's a more higher probability trade. What I'm going to be teaching you guys over this course is the more confluences you have, the more confluences you have in line with your time frame, whether that's bullish or bearish. Sorry, not time frame, bias. Whether your bias is bullish or bearish, and the more confluences and time frames you have in line with it, the more high probability it is. So without further ado, let's see how this trade plays out. And yeah, I might even move my, like, if we come to here, I might break even, but yeah, let's see how this plays out. A little SMT divergence. We'll get over CVD. We'll talk about CVD, EQ, fair value gaps, all this stuff in later episodes. But I'm just trying to give you guys a live example on what my thinking is. And yer. Bang. We hit it. I might just close half. As you guys can see, we are up. Nice. I'm charging my phone right now, but we are up a nice 200, 100. Ooh. Okay, I'm going to close it before it goes back down. But as you can see, we hit that very quickly. So I'm going to take a little partial. But yeah, this is an example of a scalp. So a scalp is when you're in the market for like a short time frame, maybe maximum under 2 hours. Right, a day trade lasts from 2 hours to up to a day, and then a swing trade is when you hold trades for multiple days or up to a week. Me personally, I don't swing trade. I think if you're patient enough, it can bring you pretty good rewards, like a lot of volume. But me personally, I like to be in and out of the market within like, what, this took like less than 20 minutes. But yeah, that's the type of trade you take. SMT divergence. You know what website to use, you know what app to use to take trades now. This is just a start, bro. And there we go. I'm gonna close all of it right there. Bang. W. And that's how it's done. Easy, $200. I'm gonna be completely honest, this is a demo account. When I hit a certain amount of money on this demo account, I think it's 27k, I've got a funded account waiting. And we'll talk about demo and funded accounts later, but let's just say the funded account gives me an opportunity to make real money. The demo account is just play. The funded account, when you pass it. But yeah, that's the second episode. Hopefully you guys found some value in this bootcamp. Hopefully you guys can learn from literally what I could experience live right here. And yeah, I'll see you guys later. Peace out. The first thing that we need to do to become a trader is we have to download this app called MetaTrader. Now you can just go on the App Store and search it up, and it should just come up like this right here. So now that we have no, it's not loading. Alright, so now that we've searched up MetaTrader 5, obviously you want to download it. You can use 4, but 5 just runs better. And I'm just going to open it and pretend. So first thing you're going to do when you open MetaTrader is you're going to come down here to the settings tab, and then you're going to press new account right here. After you press a new account, press MetaQuotes Limited. Demo account, you can just fill this in with a bunch of like random stuff. And you're going to choose Forex Hedged USD. Then you're going to choose leverage 1 to 100, and then you can choose however much money you want. For a normal funded account, I'd say anywhere between 25 and 50k, but we'll start with a 25k account for you guys. Press accept, register, you get all this bullshit. You can copy it down, but it's pretty easy to just make a new one and then press start. Boom. Alright, here we go. As you guys can clearly see, we've got 25k loaded up right here. We've got all our pairs, and this is the second thing that we're going to talk about. Our pairs and where to trade them on. Because obviously, yes, we can take a trade, I can buy, I can sell right now, but this is not where we're going to be doing our analysis to take a trade. Now, I know there's probably going to be some traders that watch this that are in the comments like, oh, why are you telling beginners to take trades straight away? You need to learn the fundamentals first. You need to learn on baby pips first. You need to do all this and do all that. Let me tell you something, bro. You do not need to do all of that. As long as you're not risking money when you first start trading, it's completely fine to take trades on a demo account. Second thing, you will learn faster when you take trades. If you wait 3 months before you take a single trade, you will not learn faster than if you start trading. Let me give you an example. If you were to study driving a car for a month, and at the end of the month, you're going to go do a driving test against a person who has been driving every single day, who do you think's more likely to pass the test? The person that's been driving every single day, getting the experience in the car, getting the experience on the roads, getting experience touching the wheel, touching all the gas and brakes, all of that, he's going to be a better trader opposed to a better driver opposed to the person who's been sitting inside learning the car fundamentals and the road rules for 30 days, all right? So you don't need to learn the fundamentals just yet. But if you're trading and learning from your mistakes, that's probably one of the most important things that you can do within the market. Just getting experience, taking trades, and then learning from them. So it's completely fine to take trades on a demo account. You obviously don't risk your real money when you're first starting. So the second app that you need to use to become a trader is TradingView. Obviously, I'm on here right now, but I'll pretend I'm you guys, and you search it up. It's this one right here. Click that, and then you can click here, and it's just sign in and make an account. So now that you've signed into TradingView, you can trade any pair you want, to be honest, but you just have to make sure that you can find it on MetaTrader. So we're going to go back on MetaTrader, and we're going to search for Euro US dollar, and we're going to put our 4 pairs here. So the way to find your pairs on MetaTrader so you're able to trade them is you press right here on the little magnifying glass, press Forex, and then you can go and find your pairs. So we're going to choose Euro JPY and Euro USD. So now if we go back to our main page on MetaTrader, we can see we have Euro USD right here and Euro JPY right here. If we press the chart button, we can see both of the charts right here. So let's look at Euro USD. Before you take your first trade, the fundamentals. First things first, we need our time frames. So there's a difference. There's a small time frame and there's a high time frame. I'm going to highlight it, so I'm going to highlight the small time frame. The small time frame is the 15-minute, the 5-minute, and the 1-minute, and the high time frame is the 4-hour, the daily, and the weekly. Now the 1 hour is like a little bit in between. It's not high time frame, nor is it small time frame. So now let's talk about candlesticks. Candlesticks and time frames are correlated, right? Each candlestick, because we're in the 1 hour time frame, represents 1 hour of price action. So, to make things simple, this 1 hour candle, let's do this one right here. No, let's do this white one. I'm going to redraw this white one over to the right over here. Okay. Here we go. All right, so this white candle, it looks like this. Big up, big body, and then there's the wicks. Now I'm going to be explaining to you guys what wicks and bodies are. So basically, this is the opening area. This line right here. You can see the bottom of the white candle open, the bottom of the body opens right here. We're going to call this the open, and then we're going to call this the close, because this is where the body closes. Within 1 hour, price is just showing us that it opened here, it came down here, it came back up here, and then it closed here. So this was the candle, right? The big body bit, because this is where it opened right here, and this is where it closed right here. This was the lowest point that it went to, and this was the highest point. The wicks are just the lowest and the highest points that the candle goes to. So let's take another candle for example. This one right here, this big down candle. So we can see the candle opens here, the opening. It pushes all the way up to here. Then it comes all the way back down to here. And then it closes around here. So that's the close. So within 1 hour, price managed to get up to this high point right here. And then get down to this low point right here. And then close right here, creating a body. Now obviously, if let's say for example, we opened here and we come up all the way up to here and we close here, then it's just going to be a big bullish candle, a big up candle. But because price sometimes comes up, but then it doesn't close and comes back down, and maybe it'll close like here, that determines the body. The start of the candle is the open, the end of the candle is the close. And you'll notice that the end of the candle is the start and open of this candle. So this candle right here opens here, comes up to here within the 1 hour, comes all the way down to here, and then it closes right here at this point. The next candle, as you guys can see, I'm making it super simple with you guys. It opens right here. It comes down to here within the 1 hour. If by the end of the hour it closes down here, then the next candle would open here. And determining where it went within the next hour, let's say it comes down here, but it's like, nope, we want to go higher, and then we close here, we close up here, then we'd have a big body and then a wick right here. So that's the premise on how candlesticks work. You can also say that, for example, if we look at this candle, the 1 hour is made out of 15-minute candles. So we can see it opens here. This was the highest point of the 1 hour. It comes down, and then the lowest point, and then it closes here. So the 1 hour is just made up of 15-minute candles. The 15-minute candle is just made out of 5-minute candles. And then the 5-minute candle is just made out of 1-minute candles. So everything's made out of everything onto the smaller time frame. So if we look at it on the 1 minute time frame, the 1 hour candle opens somewhere around here at 4 p.m. As you guys can clearly see at the bottom of the screen, it says 4 p.m. right here. So it opened right there. It came up. This was the highest point it went to. Came back down. This was the lowest point it went to. And then it closed at 5 p.m. because that's an hour. And it closes it up here. So now we know that this is the body. It's going to look something like this. And then the wicks are the highest points and the lowest points from the opening areas. And if we go back onto the 1 hour time frame, we can see that it's exactly that. Opened here, went up here, down here, closed there. So yeah, that's candlesticks and fractability, time frame fractability. So that's candlesticks ticked off. The next thing we're talking about is trend, bullish or bearish, highs and lows. Now bullish just means upwards, bearish just means downwards, and yeah, there we go. So for example, let's have a look at the same 1 hour candle that we were just looking at. So if we look at price and we look and see, where's 4 p.m. At the start, we were bullish, right? We can clearly see, if we're just looking at highs and lows, there's a low right here, and there's a high right here. We push up, we make a high. We push down, we make another low right here. We can see that it's a higher low because this low and this low, it's higher. If the low was down here and it was pushing down to here, that would be a lower low, and we obviously wouldn't be bullish. But when price is making higher lows and higher highs, we can see a higher high right here, and a higher low right here, and a higher high right here, we're bullish. But then we can see that we make a higher low right here, but then we fail to make a higher high, and then we make a lower low right here. And then we make a lower high right here, and then we make a lower low right here, lower high. So we're always flipping between bullish and bearish, but yeah. Now, here's some game. The 1 minute time frame, the trend will always be flipping between bullish and bearish. If you want to get a stronger understanding on where the direction of the market is going, if you want to understand where the market is going, then we have to look at the high time frame, like the 4 hour, the daily, and the weekly. Now we can see over a long period of time, recently Euro JPY has been bearish. We've been making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So we are somewhat bearish on Euro JPY. We can clearly see that on the high time frame. The last thing that I'm going to teach you guys about today, for our fundamentals, we've already gone over what apps you need to use, what pairs are, what time frames are, what candlesticks are. The last thing that you need to use to determine when you're going to win and where you're going to take a trade is a website called baby pips. So all you're going to do is search up baby pips forex market hours. Click on the first link right here, and now you're going to see every single session that you can trade within. So you can either trade in Tokyo session, you can trade in London session, or you can trade in New York session. Whatever session works to your time frame. Obviously, you're going to adjust it to your world clock. Which session you trade doesn't really matter, but usually people like to trade New York because there is sometimes a little bit more liquidity opposed to Asian session or the start of London session. I'm in New Zealand and London session works for me. It's around 8 and 9 p.m. open, so editors know. I just want to add in that usually whenever a session opens, for example London or New York, there might be a bit more liquidity coming into the market. I'm fine with that, but yeah, that is the first lesson, and hopefully you guys can start taking some trades because you know where to take your trades on MetaTrader, you know what app to take it on TradingView, you know what session you're going to trade. Next episode, we are going to be going over taking our trades.